Overall, I don't think there's huge concern about that, but definitely something you want to keep an eye on. I just don't, I think they would do anything in their power to keep the dividends going, as they're almost untouchable when it comes to consecutive years of dividends being paid. And that's something that's extremely important to the company, more so probably important than the actual stock price, guys. Welcome back, YouTube. Today we have a special video I'm doing for my boy T. He wants to know more about 3M. He's a dividend investor, extremely good investor actually. I should be asking him for advice sometimes, as he's just really disciplined and has his philosophies on just buying good quality companies on big dips. Done a video with him as before. I'll leave it linked up in the description here. Did a full interview with him, and really just a guy that you should model yourself after. Doesn't do anything fancy when it comes to investing. He just waits for good quality companies to have really bad weeks, months, and sometimes years, and he builds big positions in them, guys, and it's just paid him dividends, no pun intended. Over the last 5 or 6 years, I've watched him compound his wealth astronomically. So many different ways to invest in markets, guys, okay? You don't have to take on a ton of risk with growth stocks. He rather take the safer bet and find good quality dividend paying stocks, wait for them to absolutely tank and build big positions at one time. Okay, that's his philosophy. That works well for him. He asked me to do a video on 3M. Love 3M, guys. We look at their dividend history, 63 years, consecutive years of dividend growth, 63 years, consecutive years of dividend payouts, guys. This isn't a class of its own. If you want a good quality dividend paying stock in your portfolio, you don't need to look any further than 3M. Now, a lot to go over in this video, so if you're interested in buying 3M, stay tuned. First, guys, I want to start out with a few different things here, right around market value right now by Yahoo standards, okay? Right now, it pays a 3.68% dividend. When we look at the 5-year chart on it, basically trading sideways for the last 5 years. Now, it did hit a peak of looks like 250 and now is at 161. It hasn't traded great from a price standpoint. Overall, fairly reasonable PE ratio on the stock. Not paying too much of a premium for the stock, I would say right now is fair value, right? I think Yahoo has this right. I think it's fair value. I think it has a decent dividend overall. Now, personally, guys, I'm going to go over some charts here. So when I look to buy a stock, I look at a couple things. I look at fundamentals and technicals. So guys, what you see right now is a 3-year chart of 3M, okay? Trading in an interesting zone right now. Looks like there's going to be a line of support here at 155. When I look at this chart and I take a look at kind of what's formulating on the breakdown in a pretty important line of support here at 169, 170, okay? That was a clear line of support that it's held a few different times, broke below that, and you can see that in the past it's responded okay and it's actually bounced pretty clearly above that. But now we're floating at a new line of support right around 159, okay? It looks like it's bounced off of this 159 level and it's holding that 159 right now. I think it would be more beneficial to wait and see if any sort of Fed news could drive prices lower. I just don't think you're going to miss a big move in 3M anytime soon. So personally, I would wait for more downside risk before I enter any positions. Now, could something happen and this thing could move up? Yeah, it could move up. I don't think it's going to move up that much though. So I don't think you're going to miss anything big. I actually think there's a bigger probability of it having more of a downward move, a few percentage points. And you getting in at that price point would do two things. It would give you a higher yield on your initial capital. So meaning instead of buying today and getting a 3.6% dividend, if you buy at the 148, 142 to 148 mark, you have a little bit over a 4% dividend now, and you actually have a little bit more opportunity of capital appreciation. So when we look at 3M's balance sheet, very clean balance sheet. What you want to see is the first thing you always want to look at when you're buying dividend paying stocks is the free cash flow, right? You want to see at least 5 to 10% is usually the sweet spot for revenue. Okay, you want to see 5 to 10% of revenue to be free cash flowing, all right? And we got that with 3M. We actually have over 10%, so very strong free cash flow, which usually means dividend is going to be safe. They're not going to have any issues with running their business. The other nice thing I like about 3M is it actually has pretty strong revenue growth over the last year. Now, I'm sure COVID threw a wrench in some things, and this is probably more of a normalized revenue rate here for the company. So good revenue growth for a mature company, great free cash flow. When we look at the total cash on the balance sheet, almost $5 billion in cash, liabilities are $17 billion. So within 2 to 3 years, they could pay off their total liabilities if they had to. So nothing to be scared about at that. When you look at their free cash flow and what's on the balance sheet, they could absolutely take care of their debt within a 3 to 4 year period. You want to see that between, a 5 to 6 year. So if a company can take care of its liabilities off of their free cash flow and cash on the balance sheet with a 5 to 6 year run rate, that's usually a pretty good sign that the company is well capitalized. So PE ratio at 15, almost 16, in my opinion, is pretty much in line with what I would pay. Between 14 to 16 is about where a PE ratio for a company like 3M should be, in my personal opinion. Now, depending on where we are in the business cycle, that might inflate. And I think where we're heading, there's a good chance that it could get much higher, maybe closer to 18 or 19. I personally think that, I would rather buy 3M at a 13 or 14 PE, as I think there's some more bleeding that it has yet to do, and it aligns with more of my technical analysis of the company of trying to get more of a 4% yield on the stock and try to buy it at more of a discount than it is right now. But that's just my personal preference. When we look at the gross margins of the company, guys, very, very strong margins, okay? 48.8% margins, gross profit margins. When you look at the sector median, that is extremely high, okay? So like to see that. So good margins within the company. Growth is not going to be anything astronomical, just due to the fact that what's been going on the last few years and the fact that they're a mature company. So you're not going to get these huge growth, but still over almost a 10% growth is very, very solid to see. Anytime you get double-digit growth from a much more mature company that's been paying dividends for over 60 years is good to see. So oddly enough, the dividend safety on the stock is a D, and it's due to the cash dividend payout ratio being extremely high, okay? I think that's going to turn around. I don't think you have anything to really worry about with that long term. I think this is more of a few different things. Obviously, I think COVID threw a wrench in some things, caused balance sheets to get a little jacked up. Complete shutdown of the economy for an extended period of time on a company like 3M is definitely hard. Now, I know they did well with certain products through COVID, but let's be honest, that's one small aspect of a business that helped them stay afloat when we really look at the grand scheme of their business, okay? It's well above the average industry dividend yield, so very, very good to see for 3M. That's mainly what people buy 3M for. This is a big part of retirees' portfolios. They want that guaranteed rate of return. It does matter, in my opinion, where you're buying 3M. If you want capital appreciation, okay? Because there's not a lot of price movement with this company, right? It's basically going to trade between 140 to 200. That's basically where it's going to trade. So I would rather try to get it at 140, collect the dividends over the years. If it hits above 200, maybe sell a portion of it and rebuy back in on the dip. And it just kind of just been consistently trading in that funnel for the last 10 years. This is a great stock to add to your portfolio to lower the beta, lower the volatility, and add yield within your portfolio. So guys, wanted to dive into 3M. Think it's a great company. Love the fact that they're growing revenue by almost double digits and the fact that they're mature. They've been paying a dividend for over 60 years. They've been growing that dividend for over 60 years. Great portfolio, great stock to add to your portfolio if you're a dividend investor, and this is a way for you to supplement your retirement. So guys, solid company overall. I would say buying it at this price is about a C. Buying it below 140 would be an A. Okay, so if you can get it if you can get it below 140, I think that's an A plus buy. If you're buying it today, I think you got a C buy. So that's how I would grade it. I just think I think you can wait it out, get a higher yield on your money, and a little bit more of a capital appreciation going forward. As always, guys, appreciate your time. Hope you enjoyed the dive into 3M. A little different, but it was a request by the most loyal subscriber I have, and that's what happens, guys. I'm more than happy to accommodate. I'm not always going to be right, but I try to give you my best insight. As always, appreciate your time. Thank you so much for spending it with me, and we will see you next time, investors. Peace.